Have you ever wondered why the rich get richer and others don't? Could it be that a small percentage of the population seek out others to find, study, and execute on legal loopholes that exist within our financial life and make it easier for them to prosper? The answer is a resounding yes. This is the Secrets of the Wealthy podcast with John Mintz. John has spent a lifetime researching and mastering the financial loopholes that he believes should be available to everyone. Join us as we explore different strategies that help you get farther faster towards building and enjoying a prosperous retirement.
Hello and welcome to Secrets of the Wealthy with John Mintz. John, what's going on?
Hey, Eric. Good morning. And well, it's Thanksgiving week, so happy Thanksgiving to you early, that is.
Yeah, I was so excited to talk to you this week. I know that you're a big family guy, and we spoke a little bit before the podcast about both of us getting together with family. And this is, it's not my favorite time of year because you know how cold it is in a lot of ways. Now, I know you don't have that issue down there, but I just love getting together with family and having food around a table. To me is just the quintessential time just to kind of reconnect. I don't know about you.
Well, speaking of food, what's your favorite Thanksgiving food?
Oh, I mean, it's almost a traditional kind of food, but I love ham. I don't know what it is. I love a good smoked ham. And that, as far as the meat, I like turkey, don't get me wrong, but I think the ham just really sets it off for me. What about you?
Wow. Oh, well, my mom has baked pies for as long as I can remember, my grandmother too. And I guess I'm one of 5 kids and I'm the only one that picked up that tradition, so I still make pies, believe it or not.
Oh yeah.
And so I think my favorite is a German chocolate pie.
I have never heard. My dad's favorite cake is German chocolate cake. I've never heard of a German chocolate pie.
And you haven't lived.
Okay, I'm coming down. Okay, well, and my dad, you won't let me go alone. So my dad and I'll be visiting you at some point
there you go.
This weekend, possibly. All right. Well, as much as we love to talk about dessert, by the way, cheesecake. If we're talking dessert, that's mine. Okay.
There we go.
Yeah. But we didn't come here to talk about pie. We're going to talk about current market conditions a little bit. You're going to talk about that like you do every podcast. And then you've got a pretty big topic today we're going to tackle. So where do we start?
Yeah. Well, it might be more fun to talk about pie, but let's do a quick market update like we usually do.
All right.
The markets still don't want to cooperate right now. We've had multiple, what I call head fakes. When you're playing basketball or football and you throw your head one way and go the other kind of thing. Sometimes in the markets, they're called false rallies as well. But for example, mid-June, the S&P 500 stood about 3,600, ran up all the way up to about 4,300, which happened to be the resistance point, or some would refer to that as the 200-day moving average, and immediately retreated. Ran all the way back down to 3,500 and some change in early September. Now it's recently ran back up to the new support point of about 4,000, and it's starting to retreat again. So I don't know how many false rallies we're going to have before we find a bottom, but I don't think it's going to be anytime soon, unfortunately. The fundamentals, Eric, they just doesn't support further growth for a while. Inflation's still at 7 or 8%. The Fed is, they're very dead set on the fact that they're going to keep raising rates until the inflation retreats, right? And so I think we're going to be seeing more increases maybe into January, February, and then I think there's going to be more of a stall as opposed to a reversal, which is going to cause us to have a little bit of pain next year. Here's something I just saw just this week. The 1-month Treasury yield, 1 month, 30 days, was 3.93%. The 30-year, so we're comparing a 30-day to a 30-year Treasury yield. And if you don't know anything about Treasury yields, it's like CDs. The longer you wait, the more you get, right? So the 30-year Treasury yield is 3.89. So the 30 years actually paying less than the 30-day. Now, that's called an inverted yield, and the last 2 times that happened, 2019 and 2007, it was immediately followed by a recession. So, we always say we don't know what's going to happen this time, but we know what happened the last two times.
Yeah.
So I think everybody that really pays attention knows that 2023 is just going to be tough. And the middle class, unfortunately, is just going to get hammered. Is already getting hammered. Like, I think I heard the same once. They're like lambs at a wolf's picnic. Houses are traditionally where the middle class keeps the bulk of its wealth, right? And so if you bought a house, Eric, in 2019, or heck, even in 2021, it would have cost you roughly, $420,000. I think that's the median. And the interest rate was about 3%, right? Give or take.
Yep.
In fact, I think we did a podcast in November, and we were talking, it was 2 3/4 or something like that. So November this last year, I should say.
Last year.
Yeah. So, it would have cost for that $420,000 house at 3%. It would cost you roughly, $15,000 a year in mortgage payments. Okay. Well, when rates go from 3 to 7.5, as they are today or recently, now those payments go up to $30,000 a year. Well, so what people don't really understand is that the average household in America makes about $75,000 a year, right? So if you take out taxes, let's say that's $60,000 roughly. So in other words, when interest rates were 3%, it took about 25% of someone's income for their house, right? Well, today, the same house would cost them half of their paychecks, which obviously they can't afford. It's unaffordable.
Yeah.
So one of two things has to happen. Either rates have to come back down to where they were, which we just said that's not going to happen anytime soon, or houses have to decline somewhere in the neighborhood of 30 to 40%, which would bring the value down multiplied times the current interest rate to make it more affordable. So I don't know that. I don't want to be a doomsdayer and say that houses are going to fall back 30 to 40%, but I do think 20% pullback is a realistic number looking at the next year. And so in a weird sort of way, it's kind of healthy, right? Because we got too far ahead of ourselves.
Yeah,
right?
a little out of control in some of those markets for sure.
Yeah.
Now, I'm not complaining. I took advantage of it, right? I sold a house. I sold a house in March. So I'm happy about that. However,
good for you. Good for you.
It's
and I know
tough.
a number of people that did that.
Yeah.
And then just renting, sitting on the sidelines. But Bullard, the Fed's Bullard says benchmark interest rates, their benchmark is somewhere in the 5 to 7% range. And in order to bring inflation down, and we're sitting around 4. So they're not done. And I quote Bullard. He says, to attain a sufficiently restrictive level. They always use these really big words. To attain a sufficiently restrictive level, the policy rate will need to be increased further. In other words, we're going to raise rates again.
Yeah.
So, if I can put it in layman's terms. So we're not out of the woods on these markets. It's going to, obviously, the stock markets don't like a recession ever. And so we're just not out of the woods yet. But my recommendation based on all that is protect, at least through next year till we start seeing more positive signs. So anyway, enough of that thought. How about we get on to some positive stuff, huh?
Well, after one question. So what's a wolf's favorite pie?
Well, I guess next time I meet a wolf, I'll ask him.
Well, it sounds to me like it's middle class pie. I can tie everything together, Sean.
There you go. The
middle class pie. I don't want to be part of that pie, but here we go. Okay, strapping in. Now let's like you said, let's move on to something else.
You just coined a phrase, huh?
There you go. Middle class pie.
Middle class pie. I don't know. It's a good phrase, but
it doesn't sound good to me.
Oh, no, it doesn't. Well, taxes are on everyone's mind this day. I don't have a meeting with an individual or couple anymore. We're not talking taxes at some point in time during that meeting. And so what I want to do today is take some time to tell people about a little secret that, again, the idea is for us to reveal secrets that don't need to be secrets anymore. And so people can benefit from them. So if this benefits someone, it'll be a great show today. But, we are extremely grateful to have access to a one-of-a-kind tax planning software. And when I say it's saving our clients hundreds of thousands in tax dollars, I'm not exaggerating. Okay. The value proposition for our own personal practice, our firm is built usually on three core pillows. That's pillows. That's funny. We're building on pillows. Pillars, three core pillars, of which one of those is tax planning and tax management. And it's now become, we used to talk around it a little bit, but now it's become a ritual for us to talk about that every single time we sit down, whether it's an existing client or somebody new that we're talking to that's been referred to us. And we started doing this really at the beginning of last year on a everyday basis. And now it's just part of our culture. But everyone wants to know about Roth conversions these days. And if I could remind everyone what a Roth conversion is, the short version is you can take your taxable accounts, any portion of your taxable accounts, convert it over to a tax-free Roth, and there's no restrictions on how much you can do or when you can do it or anything like that. Now, of course, you always want to do this with someone that has the appropriate expertise to help you do it. But it's a very good way to manage your future taxes over your lifetime and move things into a tax-free bucket, which is going to be really important. Well, the problem with that, though, is that it can have an impact on other areas when you do it. Or if you're taking distributions and withdrawals out in retirement, it can have an impact as well. So things like Medicare, IRMA premium, Social Security, and the total tax they pay over their lifetime, it can impact all of those. So it's really invaluable. I want to sum this part up so we can kind of get into some of the questions and that sort of thing. But it's really invaluable software in that we can tell a client that they can do more Roth conversions in some years than they thought. In a lot of cases, we have folks retiring and their income may be combined, maybe $200,000 a year. And then they both retire, and the next year their income goes to nothing or a little bit if they work part of the year, right? And they don't even have the thought, well, maybe this would be a good idea, an opportunity for me to move some money out of my taxable buckets and either pay no tax or a little tax in the process. And so we can show folks how to do that. And now we use it with everyone. And the other thing we found is when folks are going over to, they meet with their CPA or other advisors, and they say, they talk about conversions, and they just kind of Google the 2022 tax brackets and look at the bracket and say, well, I think you could convert about this much this year. That's the old school way of doing things. And a lot of mistakes get made that way, as opposed to our software is just way, way, way more accurate.
Okay. So give me a better idea of how you use it.
Well, okay. So let's just say that you were a client, you came to our office and the first time, and we started talking about taxes, and you happened to bring your tax return with you.
Okay.
So we would take that tax return, we scan it in, create a PDF, upload it into this software, and literally in about 20 seconds, it converts that tax return in what's called a tax report. Now, what that means is it's a summary of your taxes, and you can maybe for the first time understand your taxes. Okay. But here's the secret sauce is then it allows us to do what's called a scenario analysis, meaning we can construct multiple scenarios off of your tax return, assuming things were the same. And if they're not, we can actually adjust line item by line item last year to the current year, and then run scenarios such as, if we were to do a $50,000 Roth conversion, how much would that increase your taxes? If we were to do a $20,000 conversion, how much? If we were to do a $100,000 conversion, how much? And then we can also compare to 2026. If you do nothing between now and 2026, how much will your taxes go up? A lot of folks don't realize that the Tax Cuts and Jobs Act is ending in 2025. And so in 2026, even with no changes, their tax brackets and their tax owed will increase. And additionally, their deductions will decrease. Yeah. And then the last scenario we do is the loss of a spouse. And so we can show folks if one or the other were to unexpectedly die early, what impact would that have on the remaining spouse left behind? And when we show them that one, it usually creates quite a sense of urgency.
Yeah.
I had a client in here last week, and they had approximately, it was about $3.2 million in 401ks and IRAs and 403bs, just stuff that's never been taxed.
Mm-hmm.
And so we ran what we call a tax burden on them and showed them how much they were going to be paying in taxes. And then we ran a scenario analysis showing what the spouse left behind would pay. And to say that they got anxious, I'll use that word, would be an understatement. They couldn't move fast enough to start getting these taxes taken care of. So that's an example of how it works.
Well, anxious is a good word. I'm assuming angry is probably another one, because you and I've talked about this before. You kind of introduced to the audience the fact that when one person goes, the other one is left with a much larger tax burden in a lot of cases, because now they're quote unquote single, which is just a huge penalty for someone passing away, a lifelong partner, right? I mean, yeah, I can understand that. Okay, so let me ask you this. I'm assuming, you've worked with clients for a very long time, and you've built great relationships and a lot of trust, but when clients first start working with you, do you have problems with clients turning over their tax returns, giving you that information?
Well, we used to. Literally, we did. It was almost like, I don't know, something about a tax return. Like, people will give us any and all of the documents, but a tax return just seems more confidential to them. But we don't have that problem anymore, because we show, the first time we sit down with them, we show them our software. And so they're usually asking us, okay, what do you need from me to be able to work with me on this and show me how this works? And so we just say, all we need is your tax return, and we get it. Usually they've got it with them and they just hand it over. We didn't realize a lot of times people had it with them in their purse or in their wherever and on their phone, and they just wasn't giving this to us. So, but we don't have that problem anymore. But I want to circle back on your comment you made earlier about the widow left behind and the anger associated with that. I can't tell you how many times I've sat with widows and had to work through situations with them, and them be shocked at what they're faced with and has to deal with that they've never even had to deal with before. So to have the strain and the emotional stress as well as the financial stress of dealing with it in general, that's enough all alone. But then for somebody to tell you your tax bracket's going to go up 12% just because you lost your husband, it's just not a fun conversation.
No.
But no, we don't have problems with people giving us their tax returns anymore. Once they see a sample of the power of this software, they get so excited about, the possibilities, and they usually get it to us the same day. And it's really an enlightening moment for them, when they realize that they can change the future of their taxes, because they're going to choose how to pay those taxes as opposed to being forced to pay them right later.
Yeah. Yep.
So absolutely.
Okay. So John, you and I have been working together for a long time. And so I know that you're not putting anything out there that's not going to be incredibly beneficial for your clients. However, we have new listeners to this podcast all the time. And I know that one thing we see it in the news, we see concerns about data breaches and all these different things. What about the accuracy of the software and the security? How does that work?
So let's just say this. Accuracy would be an understatement. It uses something called OCR technology. I'm going to try to say this right, but optimal character recognition technology. It is state-of-the-art technology. And so literally, if we've had circumstances where a client will give us their tax return and we'll upload it, and then we get an error message. And the error message says you are missing Schedule E, or you're missing, the K form, or whatever it might be. And so we'll go back and tell the client, he's gone at this point, right? And we'll call the client and say, hey, we need this schedule. No, you've got everything. You've got all the pages. Well, our software is telling us we're missing this page. Can you reach out to your account? Well, I reach out to him, but I'm telling you, he told me he gave me everything. So, okay, we get a call the next day. Yep, he forgot to give me that page. Here it is. It's really that accurate. And so it reads to a 99.9% accuracy, and commas and zeros and pluses and minuses, the whole nine yards. And it will kick it out if it's not 100% accurate. And so that's the first thing, is it's very accurate. And they use state-of-the-art technology as far as protection and security is concerned. But some folks, we just tell them, hey, if you want to black out your Social Security numbers, it's still going to be able to read the return. The Social Security numbers are not important. And that's usually the biggest piece for folks. We've only ever had one person ever ask us that it's not necessary. But as far as the actual return is concerned, it's very, very accurate.
Okay. Well, you actually brought this up because your client had to go back to their CPA to make them give them all the right paperwork. Where does the CPA fit into all this? I mean, is this something that you have these conversations with them quite often, or what?
It's not, but we could. I guess it would be just going to CPAs. This would be a great way to market to them, to join forces with them. I just don't have the time, so we're so busy. But we do not give. We never have and never will give accounting advice, and so we tell clients this is not accounting advice. We're not CPAs, and we feel that CPAs are a very important part of our extended team. I've interviewed CPAs on here before on the show. Yeah. But nothing against CPAs. They're just busy. And it's everything they can do just to gather the info and get the tax returns prepared and off on time. They don't have time for tax planning. They just really don't. And so that's kind of where we come in. And even if they did, they don't have this software that would make their job easier. And so that's where we come in. But every time we do an analysis for someone, we always tell them, here's the analysis, go run this by your CPA and make sure that he or she agrees with it. And of course they always do, but yeah, they're more there for, the CPAs are more there for just support and to validate what we're showing them and get sign off from their CPAs before they actually pull the trigger on the Roth conversion or whatever else it might be.
Well, correct me if I'm wrong, and speak to this for me. CPAs, they don't know all the information. And like you said, they're busy. I can't even imagine having a job where you had to deal with the IRS on a daily basis. And they do, right? And so with them, they have no idea what their clients' overall goals are. That's what you do. They don't have any idea of what, maybe the extended family and that they're wanting to, pay for grandkids' college education, or they're, planning a huge trip with their entire family. And so they're looking to free up funds A, B, and C, right? All these moving parts, which you do, like you said, they don't have time for that. They're concentrating on making sure that the IRS isn't going to call them up, right?
Yeah. That's I've never thought of that before, Eric. That's a really good point, because when somebody comes into our office and they're like, hey, John, we would like to do a Roth conversion. Can you help us? Or, hey, John, I want you to look at rerouting this life insurance policy for me. I don't want to pay the premiums anymore. Well, we don't just say, okay, we'll do that. We literally, whether that's the first time we've met them or the 30th time we've seen them, we re-review every single piece of their financial life before we give any advice on that. Yeah. Well, can you imagine the accountants trying to do that?
Yeah, no, not a chance.
They can't. I mean, they don't even know what assets they do or don't have. Yeah. Right? They don't have time for that. I think the last time I heard, there's roughly 84,000 pages in the tax code. Yeah. So, and I think it changes daily almost anymore. So I don't think they can even keep up with that, much less all this other stuff. So if you just kind of use common sense, you say it's not realistic for them to be tax planners, or at least good ones. So that's a good point. Yeah.
All right. Well, I know we're coming to the end of our time together, and if folks want to reach out, how do they reach out? If they want more information, and I guarantee, well, I can't say guarantee on this podcast, I am willing to bet 99% of my weekly allowance, which my wife gives me, that there are CPAs that are listening to this podcast as well. If a CPA wants to reach out to you and talk to you about how you accomplish this and how you can help maybe partner up with them, or just a listener that's like, man, I mean, that's a great strategy. I'd love to see that software in action, because I know that there's tax burdens I don't even know about. How do they get a hold of you?
Yeah, and we'd be happy to share this with anybody. We don't see what we do as that we have any competition. I mean that not the way it may have sounded, meaning that there's enough people out there to help, and there's not enough of us to help them. And so if I can help somebody else help the people that are needing it out there, I'd be more than happy to do so. But yeah, if you reach out to us, our direct number is 817-225-6260. We really prefer that people call us, especially on this kind of stuff, because we can answer questions that we maybe couldn't do over text or email or what have you. But, there's two things we typically could do and will do when you call us. One is we can run what we call a total tax burden for you, meaning that, if you have $473,000 in accounts that have never been taxed, when a matter of about, 5 minutes, we can tell you what the amount of taxes that you will pay on that is, say that you were to live till age 90, and it'll be deathly accurate based on today's tax laws. And if you see that and you say, oh my word, I didn't realize I was going to pay that much in taxes, well, then we can run a Roth conversion analysis to show you how much you could potentially reduce those taxes by. It's usually somewhere in the neighborhood of about 60 to 65% reduction. It's not small. Yes.
Christmas.
Yes. And so another way to put it is you go from paying $1 million in taxes potentially to paying maybe $350,000 in taxes. It's that big of a difference.
That's insane.
Yeah, it is. And so we're here to help. We love what we do, and if we can make a difference with one person, one couple, then it's been a great day.
Yeah, absolutely. All right. Well, I thought that was the last thing I had, but I've got one more thing. I know this podcast is named The Secrets of the Wealthy, and it's not named The Secrets of the Mints, right? However, if somebody wants to reach out, would you be willing to give that German chocolate pie recipe out?
My mom would be the proudest mom on the planet if she knew I was passing out. Now, my mom is like me. She, a lot of ladies, they have their recipes and nobody can know it.
Mm-hmm, right.
My mom just loves everybody on the planet. And so she absolutely consider it done.
Okay, perfect. It's so funny you said that because I just watched a video just a couple of days ago. There's a young woman who's going around to graveyards, actually, to cemeteries, because she's been told that there are cemeteries that some of these ladies, and it's so far it's been all women that I've seen, they put their family recipe, their favorite recipe, on their tombstone so everybody can have it.
Oh my gosh, that's the coolest thing I've ever heard.
Isn't that neat? I thought that was pretty amazing. So
yeah, awesome.
Always giving. John, thank you so much for your time.
Oh, thank you. And now you know what to put on my tombstone.
Well, I don't know the recipe yet, but I'm going to find out. All right. Thank you again, John. And of course, our last thank you goes to you, listening audience. Thank you so much for tuning in and listening to the Secrets of the Wealthy podcast with John Mintz. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when John comes out with a new podcast, it'll show up directly on your listening device. This makes it really easy to share these podcasts with your friends and family. Again, thank you so much for listening today. For everyone at the Secrets of the Wealthy, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Secrets of the Wealthy podcast with John Mintz. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of John Mintz. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.